Uganda's Apex Bank lowered the key lending rate by 25 basis points to 10%. The plan is to keep inflation at reasonable levels. The central bank says the restrictive monetary policy has also strengthened the local currency. The shilling hit a record low in February this year. It has since picked up by more than 6% against the US dollar.
Once you start easing, the easing will start feeding through. For example, if the interbank was at 12, probably going forward, we start seeing as the liquidity conditions also improve, we start seeing that interbank rates start edging lower, and ultimately feeding into also earning interest rate and time deposit rates later as the transmission feeds through the entire chain.
The central bank, however, still has its eyes on inflation. Both headline and core inflation saw a slight increase to 4% in July, compared to 3.9% and 3.8% in June this year.
We expect inflation to continue rising moderately in the next 4 months due to seasonal factors, but stabilize around the target of 5% by the first quarter of 2025.
The bank has maintained its growth estimate of between 6.0% and 6.5% for the fiscal year 2024-2025, which began in July. The Ugandan economy is also expected to pick up from the impacts of the global shocks resulting from the conflict in Ukraine and the COVID-19 pandemic. The central bank is pleased with the growth trend so far, but remains cautious with potential risks posed by higher commodity prices and trade disruptions linked to the events in Middle East, as well as other geopolitical uncertainties. Leon Sanyange, CGTN, Kampala, Uganda.